Up next, our next presenter here is Kim Rivers, CEO and co-founder of Trulieve Cannabis. Trulieve trades under the ticker symbol TRUL in Canada and under TCNNF in the US, with shares up 77% year to date. Trulieve is Florida's first and largest cannabis company. It has amassed an impressive share of the Florida's medical cannabis market, where it accounts for about 50% of total volume sold. The company's dispensaries are 2.5 times more productive than those of its peers in that market on average, which we believe is indicative of a very deep competitive moat. A key factor in the company's success, in our view, has been its ability to maintain adequate supply in the face of surging patient demand. Trulieve also operates in California, Massachusetts, and Connecticut as it looks to expand its presence in the US. With me now, I am pleased to introduce Kim, who will tell us more on Trulieve and the opportunities that lie ahead. Kim, you may go ahead.
Thanks so much for having me today. It's a pleasure to be with all of you. That was a great introduction, and I'm again excited to be here to talk with you about Trulieve. So I'm going to move quickly because we've got about 15 minutes to 20 minutes to go over the presentation, and then I want to make sure that we have time for Q&A. So for those of you who may not be familiar with Trulieve, we were one of the original licensees in the state of Florida. We opened our first dispensary in Tallahassee, Florida in 2016, and we have grown the company from that very small team of about 10 to now having just over 3,400 employees. We do have operations in 4 states, with Florida certainly acting as our prominent market currently. But we're very excited about launching Massachusetts next year, and we also have smaller operations in California and Connecticut. We did have over 1.8 million face-to-face transactions in 2019. And one fact that I'm very proud of is that we have been profitable since 2017. As mentioned, we do have approximately 50% of all products that are dispensed in the state of Florida are dispensed through Trulieve, both in medical cannabis or oil products, as well as flower products. That is due to, in large part, by our very robust supply chain. So we are a true seed to sale company that's mandated by the state of Florida, meaning that we are vertical, which has really required us to gain depth and scale in each aspect of the supply chain. So beginning with cultivation, we have just over now 1.8 million square feet of cultivation capacity that's split between indoor cultivation, where all of our high quality flower is grown, and also some of our high end material for concentrate products, as well as over 1 million square feet of greenhouse that is used for biomass. That goes into our manufacturing facility that is a state-of-the-art GMP manufacturing facility where we produce over 500 SKUs using supercritical ethanol and CO2. And then of course that's distributed through our very robust retail channel in the state of Florida. This is actually already outdated. So we have 56 retail locations in the state of Florida currently. We're actually on track to open number 57 later this week. And we are continuing to grow in all of these segments, and are targeting having approximately 68 stores in the US by the end of the year. One thing that I will say is that I think that, and just going back here, we don't talk enough about the fact that, given our scale, we believe one of, if not the largest, from a cultivation standpoint, manufacturing, and from a retail standpoint. So we're certainly in the top 1, 2, or 3 in each of those categories, really in the country, which is something that we're very proud of. When we think about our go-to-market strategy, we've developed this strategy over time, and we have basically 3 tiers. And we took a page from Whole Foods, if you will, and that we've got our truly branded products that are, you can see them up there. They're very uniform. They look to address, almost every product segment that exists currently in the market. But really, when we thought about whether or not that would be enough as we grow Trulieve, not only in the state of Florida, but also as we look to other markets, we really took a step back and decided that it was a strategic advantage to have a little bit more diversity to your shelves, and to make sure that we also had best in class product representation on our shelves in all categories. And so we did execute a number of licensing agreements with some national players that we felt were going to be really strategic adds to niche segments of the business. And so when you look at Blue River, for example, that's a solventless company that has operations in California, pretty deep presence in California, as well as Massachusetts, has been a fantastic add to our lineup, with that canna connoisseur really gravitating to those products that require, no solvents to bring to market in a scaled way. We're very excited about edibles coming to market in Florida and have a number of licensing agreements with partners such as Love's Oven, as well as Bang and Binsk, to bring edibles to our shelves. And then, of course, Slang is just a wonderful portfolio of brands and products that also complement our Trulieve SKUs. And then in addition, importantly, we also believe at Trulieve, and so we have a relationship with our customers, and they're known as Trulievers, and they're very passionate and engaged with our brand. And really, one of the things and one of our keys to success is building authentic relationships with our customers. And so really, when we stepped back and thought about how are we going to be able to rapidly do that in other markets that aren't our backyard, we really felt like partnering with local brands and local advocates was important. And so we tested that theory by developing a relationship first with a group called Sunshine Cannabis. They've been fighting for legalization in Florida for a very long time. And we partnered with them and developed a brand, and it has just done incredibly well. Literally, their SKUs sell out almost every time we put them on the shelves, and really proud of that partnership. And we've since expanded that to other local brands and plan to take this concept of really fostering and nurturing local brands to other markets as we enter them. And then wholesale, we're very excited to be able to launch our wholesale platform that will be coming to Massachusetts. We do have a large dispensary network. This is just a visual representation, and have had the pleasure of enjoying first mover advantage in many of these markets. We also have a home delivery service that's next day, with a fleet of over 200 vehicles on the road at any given day, and we do canvass the state with next day delivery. We also have call center that is staffed by Trulieve employees, and on average, we had over 4,500 calls per day in the second quarter of this year. And of course, e-commerce continues to be a very robust channel for us. And certainly we've spent a lot of resources around shoring that up in a lot of things that we can talk about, such as SAP integration and so forth, behind the scenes to support all of our transactions. So we had over 58,000 deliveries to patients last year. So that is an important channel for us as well. Became more important, of course, during the COVID time period. We do have a mobile app, and we do community events. Again, just really making sure that our Truliever community is connected and supported throughout our business. We have over 344,000 patients or Trulievers. As I mentioned, did over 1.8 million face-to-face. On average, our patients are visiting us 2.8 times per month. And so we talk a lot about loyalty metrics and repeat visits, and really, again, nurturing and encouraging that reciprocal relationship with our customers. So we have a loyalty program also that enhances that fact. Talking very, very quickly about COVID, because this could be an hour-long conversation in and of itself. We did see some significant changes during the COVID period. So prior to COVID, we had about 80% of our patients were walk-ins, 15% pickup, and 5% delivery. That changed in the middle of COVID and really just flipped to 20% walk-in, 60% pickup, and 20% delivery. So we more than doubled our deliveries, and then really tripled or more our pickups. So certainly that has been a very, very interesting. Our basket sizes also changed. So they went from 121, 125, they peaked at 127, while visits remained 2.7 times per month. And so that just simply means that there was increased consumption during that time. Now it's since normalized, and so we are seeing baskets back down to 120. But interestingly, we're seeing those visits actually tick up slightly to 2.8 visits per month. So we keep an eye on these metrics. That's just one example of what we see and what we're tracking on a very, very regular basis. When we look at our retail sales metrics, our customer retention rate in Q2 was 76%. Again, 2.8 visits per month with $125 per visit as of the end of Q2. Our annual patient spend has been growing. It actually grew to $3,900 a year, which is an increase of $1,100 over Q4 18. That's something that we update annually. And then for the 26 stores that we had open for the full quarter in Q2 19 and Q2 20, we had a same-store sales increase of 30%. We do have a very robust no questions asked return policy. That's something that we have always had, and it's really, I think, important for us to again establish that trust relationship with our patients. You know, as we know, cannabis is new to a lot of folks. Certainly in Florida, we have a lot of new patients entering the market on a weekly basis, and so having the ability to know that you can bring back a product has been important. However, even though that we have that robust policy, we have less than a 1% return rate, which I believe speaks to the quality of our products and the quality of our people, the fact that we are spending some time with folks to get them into the right product on the front side, and that our products are working for them. We do have an average revenue per square foot run rate of $2,300 across 44 stores in 2019. So we're not quite yet caught up with Tiffany's, but we're watching that metric closely, and that's a fun one to track and report on. We have done a couple of public offerings that I just will remind folks of if you haven't been following the company. In October and June of last year, we were one of the few public companies that have been able to successfully raise public debt in a way that's on more normal, quote unquote, cannabis terms, if you will. So straight debt, no convertible feature at an interest rate of 9.75%, which is considered really great for the cannabis industry. I'm of course very hopeful that with the passage of safe banking, that those rates will come down into more, I'll call it normal industry standard. And we're certainly well poised to take advantage of that when that shift occurs, given our strong financial position and our healthy balance sheet. Just to talk quickly about our expansion outside of Florida, we have a dispensary in California that we really look at as an R&D play. So we've been learning a ton about the recreational market out there, trying to understand SKU management, because you just have such a plethora of brands available to you in California, and have really walked away with some interesting insights that we're applying across our other markets. Massachusetts, we are rapidly building out our Massachusetts footprint. We have 140,000 square feet in Holyoke, Massachusetts, that will be a grow production site, and also have a store ready to go as soon as that cultivation processing gets final inspection and approved, along with, of course, licenses for up to 3 medical and 3 recreational operations. In Connecticut, we also have a dispensary that has been doing really fantastic, serving approximately 13% of the Connecticut population, and really like that market and are looking at expansion opportunities there as we think adult use is on the horizon. Oh, and for some reason my slides are stopping there. Oh, there we go. Sorry. So moving on to our operational results. When we look at our quarter that just ended, we ended the quarter with $120.8 million in revenue and $60.5 million in EBITDA. Of course, we have been, as I mentioned, profitable for many years, and it really is financial discipline as part of our DNA. It's important and has been important for us to make sure and ensure that we are growing within our means, and that we are not dependent on the capital markets for our growth trajectory, that we are self-generating and able to really make sure that we can expand as we expand. And again, very, very proud of our financial results, as that we believe is a barometer of that discipline and of our execution strategy over time. Also on our recent conference call, we did increase our guidance. So this is representative of our new guidance that was just issued. So we believe that in 2020, we will end the year with somewhere between 465 and 485 million in revenue, and somewhere between 205 and 225 million in EBITDA, which represents about 44 to 46% with respect to an EBITDA margin. So again, halfway point in the year, we feel very good about where we are in accomplishing those goals, and look forward to ending the year on a very, very strong note. I was asked to talk about some of the catalysts that I think are coming our way. And so just a couple that I'll quickly touch on. So one, I think that from a federal perspective for cannabis in general, we're all certainly have our eye on safe banking and the stimulus package to see where that lands. I believe that safe banking will be somewhat of a game changer, certainly for Trulieve, because as I mentioned, we are profitable. We have the ability to meet very standard debt covenants, and would love to have the ability to just access financing tools that any normal business in our position would be able to access at significantly lower cost of capital and significantly lower rates. So we do believe that that will be a game changer. In addition, just from a operations perspective, being able to have a banking relationship with one lending institution that is of the proper size for our company would be fantastic as well. Right now, we are banking with state chartered banks, and that's been going great. We love our partners there, but it would be nice to have options on that front. Obviously, we're also looking at the conversations that are happening at the state level with moves to legalization. Certainly with COVID, that is accelerated in some cases. There was I think a release today that there were some other governors that are having press conferences on that very item now. I think actually this afternoon. And so, we're looking at that as a trend that we hope carries over state to state as states are looking for revenue generators to shore up deficits that are now looming as a result of COVID spend. So that's something else that we're certainly have our eyes on. When we look closer to home, when we look at Florida specifically, edibles is, I believe still coming and still definitely on the horizon for 2020. We don't have edibles available yet. We think that that will be a significant, revenue driver for us once that passes. We are sitting on go. We have been for a while. We've got a 10,000 square foot state-of-the-art kitchen that's already been approved by the Florida Department of Agriculture, which is one step. And we're just waiting on rules from the Florida Department of Health, which would be step number 2. And then, of course, we'll be ready to submit our full line of products to the Department of Health for approval. So very excited about that. And, in addition, there is a court case in Florida that could result in on a go forward basis, the ability to wholesale in Florida. So that's something else that we're actively monitoring. I don't think we're going to have anything back on that. I would say the soonest it would be the end of the year, but that may push into 2021. So lots of runway on the horizon. The last thing I'll leave you with is Florida has increased in terms of just the Florida runway. Currently, we have just under 400,000 patients in the state of Florida. There are 21 million people in the state of Florida, so that represents less than a 2% penetration rate. When you look at other mature markets, such as the Arizonas and others that are medical, we believe that that penetration rate can certainly be up to call it just under 4%, maybe 4 to 5%. And so we certainly have a long runway left in Florida. Illustrative of that is the rate at which new patients are onboarding into the Florida program. So if you look at where we entered the year, so on January 10th, there were about 303,000 registered patients in the state of Florida. By July 31st, there were 383,000 registered patients in the state of Florida. So we grew by approximately 80,000 patients in 30 weeks. So the rate at which patients are coming into the Florida program is just unprecedented. And we certainly think that that trajectory looks to be continuing, and are very excited that we are in our position in Florida, and will remain committed to being the market leader here. And I think that I will then turn it back over to you for for questions.
Awesome. And I'd just like to remind our viewers on the Zoom platform, you're able to submit a question through the Q&A function there, or else email me directly. And I want to thank you, Kim, because that was an awesome presentation. You managed to cover a lot of ground, spanning financials, operations, your outlook, and the catalyst ahead. So we appreciate that. I'm gonna kick us off on the Q&A here. Something from my last research note, I had stated that I think M&A is looking increasingly likely here. You've got 150 million on the balance sheet. You're free cash flow positive. You're able and capable of running another operation. With that in mind, I just wanted to go to your remarks in this presentation and on the Q2 call that some of these states in the Northeastern corridor are really attractive markets and markets that you find exciting. Is that somewhere where we could see Trulieve potentially make a move into? And what is it about those markets that you think fits well with your platform?
Sure. So, as a public company, I can only say so much. But what I would say is that we have been, I think, very bullish and really, vocal about creating this hub model whereby we have synergies with operations centered around activity, so that you can gain efficiencies. And so we are focused on, really, and we think that how the market across the country will naturally evolve is that, you have 5 hubs. So you have, the Northeast, Southeast, Central, Northwest, Southwest. And so certainly, we're on a little bit of a cannabis island currently in the Southeast. We do think that that landscape is going to be changing, and certainly are keeping an eye. And those are really going to be more ground up states that are just now, looking to put programs in place, application processes, and so forth. We do have a very robust applications team. So just as another point, something we don't necessarily talk about as much as M&A, but there is an organic component of this as well that we are pursuing. And then, of course, in the Northeast, when you think about, we look at Massachusetts and planting a flag there, it would be a natural fit to start building again, other businesses around that business, so that we do create that hub concept, whereby both from a personnel standpoint, systems, non-cannabis materials, things like, when we think about, soil and nutrients and so forth, that can be transported across state lines, again, to gain economies of scale more rapidly. So yes, the Northeast remains a focus for us. We also, of course, are very excited and enthusiastic about the opportunities that will be present in the Northeast, as some of these states are signaling that they will be considering adult use recreational cannabis, onboarding in the near future.
That's great color. Thank you, Kim. And we're getting a couple of questions now from our YouTube platform, as well as investors emailing me. Just looking for additional information on adult use legalization in Florida. So
Sure.
I'll ask you, what's your outlook for that potentially being passed in the next couple of years, and when and if it does get passed, what kind of a lift or pickup in a growth rate could we potentially see?
Yeah. So, while I'm always hopeful that there could be legislative adoption of adult use, and look, I think before, I'll call it pre-COVID, I would say that would definitely not be on the table in Florida, just because of the history with Florida and how the legislature has approached our industry in general. However, I think that COVID does shift that dynamic somewhat. So I think it remains to be seen, and it has not yet been talked about. But I think, to be determined whether or not there could possibly be a legislative, any appetite at the legislative level to address this. Otherwise, medical cannabis in Florida was passed via ballot initiative. It passed with the highest passage rate of any ballot initiative in the state of Florida's history. So that's very encouraging, of course, with over 70% of voters voting for medical cannabis. And so I do believe that if it goes to the ballot, that I think that there's a strong likelihood of passage. There's a couple of ballot initiatives that are working their way through the process currently. So they have to be approved by the Supreme Court for their language. And then once the Supreme Court has validated that the amendment qualifies to be included in the ballot, then of course signatures have to be garnered. Because of some changes to the law, I think that the most probable, first opportunity for a ballot initiative to appear would be probably 2022. When you think about the lift that it could have on the market, there are approximately 130 million tourists that come to Florida every year, not counting, again, the 21 million residents that I just mentioned. And then just keep in mind that what we're doing currently is in a program that only has 400,000 participants. So just when you kind of let your mind stretch to what share of the 21 million residents and what share of those 130 million tourists we could potentially capture in an adult use market, those numbers get very, very big very quickly.
We appreciate your outlook there. Thank you, Kim. Just want to go back to your comments on the runway for growth and the potential for the market opportunity in Florida within the medical context.
Mhm.
There's almost 400,000 patients in Florida. There's 270 dispensaries in the state, and Trulieve alone has 56. Just want to get your thoughts on, how many patients could there still be added to the program in Florida? How many dispensaries would you need to be able to fully serve the patients to the degree that you would like? I'm trying to get a sense for, the growth prospects ahead within a medical context.
Yeah, sure. As I mentioned, we've got, currently just under 400,000 patients on the registry. So that represents of 21 million people, that's going to represent just under 2% of penetration. Again, compared to other medical states, you're looking at a 4 to 5% penetration rate. So, and the patient onboarding from on a week over week basis is not slowing down. It's actually rapidly increasing. So another stat there is when we entered 2020, on average, new patient entrants were about 2,000 to 2,500 patients per week, was an average week of new patients entering the program. Currently, we're averaging about 5,500 patients per week. So that's more than a double increase from January until now in terms of new patients entering the program. So we certainly continue to see a robust appetite for folks to come into the program and participate in the medical cannabis program in Florida. With respect to number of stores, really when we look at and we're building out our pipeline with respect to how many stores we need, there are a number of factors that we look at. We certainly are looking at the trends with respect to patients. We're also looking at the physician activity and the number of physicians that are active in the state. We're also looking at our current ability to service patients. We're looking at things like wait times, drive times, and we're also looking at where we deliver. So there's a number of factors that go into site selection and triggers that will let us know that it's time to put another store in a specific area. For example, the store that we're going to be, launching this week is in the St. Pete area. We have a number of stores in that area generally, but again, in some of these major metropolitan areas, as we all know, it's important to have locations in different areas of town because, quite frankly, folks, are with traffic, et cetera, it can be difficult to get to a dispensary on the other side of town, particularly if you're thinking about going during a high traffic time of day. So we do have, of course, service standards that we want to maintain. And so that's a big factor in terms of determining whether or not we need another store in a location. In addition, we also are looking ahead. And so we are also looking to, to place stores in areas that may serve recreational patients. Or recreational customers rather. So we opened a store in Daytona Beach, also Panama City Beach, and also Key West. And while they're fine and they service medical patients today, we think that of course those will be very, high growth stores for us in a recreational market.
That's awesome. Thank you, Kim. A question from our audience now, going back to your comments on edibles. It is something we've been looking forward to in the Florida market. And I'm sure you are as well. Could you perhaps give a sense on what kind of a lift you could potentially see from edibles being introduced to the Florida market, as well as what you're doing in ahead of that to prepare?
Yeah, no, absolutely. So, we believe that the edibles could represent as much as 20% of the products sold in our product lineup. We know that there is a incredible amount of pent up demand. We are literally asked about edibles almost daily. We also know that many of our patients are making edibles with some of our products, particularly our True Clear syringe product, our distillate product, as well as our True Powder product. So we do know that there is, and believe that there is a significant demand for edibles. The one thing with edibles is that, it is a different margin profile, and we do believe it will be a really great addition to our lineup from a margin perspective. We have, because we have that very large greenhouse footprint that we had harvested completely over in last fall and actually just wrapped up that harvest last quarter, we do have a great amount of oil reserves that for those of you who look at our financials see on our inventory line item there. So we are ready to go with respect to having supply allocated for edibles. So one of the things that's going to be important for us is to make sure that we can produce two things. One, a very robust and fulsome line of edibles. So what you'll see from us is not just, oh, here's a gummy product or here's a chocolate product. We plan to have a really complete and full lineup and lots of different ratios and again, form factors, of course. And then secondly, that we're not making the decision for the customer. In other words, we're not going to have edibles at the expense of not having other, well-selling, oil products on the shelves. So we'll be able to run them simultaneously while we make the determination in terms of really where the demand is and where the customer, is there. Look, everyone votes with their dollars, right? Where they're focused in terms of product demand. So we're really excited about it, and really, like I said, have been sitting on go for a while now, well over almost about a year.
That's awesome. Thank you, Kim.
Yeah.
And certainly, new product formats that you've introduced to date have been a stellar contributor to your results. So looking forward to seeing that.
Great.
And with that, we've reached the end of our time slot. So we thank you very much for having us, and we will pause for just a moment to move on to our next presenter.
All right. Thanks so much. Have a good day.
Have a good one.